So kicking off with the budget, if you haven't had a chance to comb through all 800 or so pages, this is the budget in a single chart. Incredible revenue windfalls, the orange bars there. Massive inflow of tax receipts compared to what we expected even 4 months ago. Big increase in income tax collections off the back of the stronger than expected labour market recovery. Big increase in company tax collections off the back of high commodity prices. And a big whack of that going out the door in new spending announcements. And you can see there the kind of red component of the bars, that's really front-end loaded. So we're seeing a lot of that cash out the door in the next financial year. So you can see the same thing if we look at the major budget measures. So this is the things that are going to have the biggest impact on the bottom line over the next 4 years. You'll note very little in terms of measures that are adding to the bottom line, quite a lot that are subtracting from it. And a lot of those are short term. So we have the cost of living tax offset, which is going to add another $400 to people's pockets after they put their tax return in July. The cost of living payment, which is $250 to everyone on welfare, which will be rolled out the door in the next few weeks. The temporary reduction in the fuel excise, which is going to last for 6 months. And then some policies around responding to the floods, preparing for the next COVID winter. So it's a lot of cash hitting the economy in the short term. The other thing I think that's had less attention is just how much spending is loaded up outside the 4-year forward estimates. So the government has gone big on infrastructure. Another big transport infrastructure package, as I'm going to come to, on top of what's already a big pipeline. $21 billion in regional infrastructure, that was the big surprise on budget night. Widely rumoured to be the price for negotiating net zeros with the Nationals. All I can say is it looks like Barnaby's a pretty good negotiator. And more spending on defence, again, on top of what has already been a series of announcements. $38 billion over a 15-year period to increase the number of Defence Force personnel, on top of further spending on increased military capability and hardware. So let's come to the economic consequences now. As I said, we've got a top-up to the tax offset, which was already set to be $1,000 for some individuals, which was kept in place for stimulus coming out of COVID. When you combine that with the payments to welfare recipients, the government's going to be putting about $13.4 billion into people's pockets over the next 6 months, 1.3% of GDP. Compare that to the first stimulus package from the global financial crisis, 1.2% of GDP over 6 months. We are not in a recession and we're not in a crisis. We're expected to have unemployment with a 3 in front in the next few months. Consumer spending is expected to ramp up substantially over the next year. Investment is supposed to pick up as the general outlook improves. Our challenge, as others have already said, is inflation, estimated that should be 4.25% this year. Is that normally the sort of economic environment when you'd be expecting to see major fiscal stimulus? I think clearly the answer is no. It will increase the probability of a rate rise happening earlier and a bigger front-end loaded rate rise than we otherwise would have expected. I want to come to the medium-term outlook now. I always get worried when I see big infrastructure spending pre-election because the risk, of course, is pork barrelling. There is certainly some of the indications you might expect to see higher than expected spending in Queensland, where there's a lot of marginal seats, lower in Victoria, that's the typical pattern. In New South Wales here, it's actually less spending than we might otherwise expect, but a lot of it flowing through to marginal seats. But my bigger criticism is more of an economic one. First of all, when we put money into projects that haven't gone through normal assessment process and business cases, we always risk wasting taxpayers' funds. But more importantly, we actually have a really full pipeline of transport infrastructure projects. Big set of projects, particularly the kind of mega projects, $5 billion or more. We've had state treasurers, state infrastructure ministers warning about the challenges of delivering on this vision. We've got shortages and high prices for raw materials, challenges in machinery, key inputs, key labour, challenges in simply just managing these contracts. And on top of that, we're going to add substantially to the spend.